Have a look in the coming week Nifty weekly trend. So as per our one standard deviation concept, so it is saying that coming week you will be having the Nifty uptrend if it is going above 11,530. Same way, if it slips below 11,404, you will be having the downtrend. So this is as per the one standard deviation software. And same way we can see for the Bank Nifty also. So this week's levels we have not released in our YouTube and all. So those who do not have that software, they can just take a note of this. Or once you get the recording also, you can able to see this weekly trends. This is for the Bank Nifty. So this is using the one standard. 9:30 I will be starting. English and Hindi, both the sessions you can able to join. And last session I have given a brief description about this program. This is a 5-module program. You will be learning VIX, volatility index, then Fibonacci, then GAN, then futures and options, and followed with you will be having some live market practice. So difference of this program with any theoretical program will be most of the concept what you are learning in this program will be having a direct practical implications. So here you will not learn anything that yes, this formulas or these calculations you have done, but those calculations market has not accepted. So you have to bend the twist, then market will accept, not like that. So here you are learning specific target oriented concepts. The way calculations say, market accept in the same way, and there will be a small bit of difference will be there because it is a calculation. So there will be small deviations will be there in the value you have calculated and the market happenings, but that will not be a huge deviation. That will be a very small deviations. You can say there will be a 1 to 1.5% of deviations will be there. So that kind of concept you are going to learn. And here most of our programs we used to give you specific target oriented concepts. The reason is many of you will be knowing the option strategy, many of you will be knowing the VIX. So going to use what, that is more important. So that is what you are learning. That score based pair trade concept was there. So wherein Bank Nifty and Nifty you can do some pair trades. Those who are paid clients, they will be knowing. We entered a trade, it went into a loss, Z score expanded, and for 5-6 days it was accumulating the losses, and one fine time it has started balancing, it has come to the profitability. In the past 2 to 3 days period, it has gone into the profitability. So this concept has that kind of essence, but provided you must trust on that concept, use it properly, and once you have used that, you should have a strong convictions that yes, it is going to work for me. Because if you are so much nervous, tensed, or you have not hazed, or you have tweaked some rules, then it may prove wrong for you. 9:30 to 11, then 11:30 to 1 o'clock we have the Hindi program. So in between this, I may give you 2 breaks, each of 5 to 10 minute break. So our first break I can give you around 10 o'clock. Then we'll have second break around 10:30. So quite mathematical things you are going to learn. So for that only, that is essential. Some breaks you can take some breaks so that you can refresh something. So here we are going to learn on the VIX. So volatility index Last time I have told you this basics of volatility index we have gone through. How you can do the option intraday trade in the VIX, that also I have covered. So there are two more concepts here. Option strategy formation using VIX, monthly, weekly index trend using the VIX. So VIX is associated with Nifty. So VIX you cannot use with the Bank Nifty, you cannot use with any other stocks. So only with the Nifty you can able to use it because it is derived from the Nifty. Fine. So in future, if they provide the volatility index for Bank Nifty or any individual stock instrument, then that is different. But currently it is available only for Nifty, so you can use only for Nifty. So now we'll be going to, I'll be taking you to the VIX trend forecast, wherein we have to estimate the price range from the VIX, and using the Fibonacci principle, we'll be using the trend forecast. So I have just prepared the Excels for that. So directly I will take you to that Excel. So there I'll be explaining those things. So here I have just taken the volatility index for values for the past 1 year, starting not 1 year, from January 2020 to the till date values I have 9th September, 10th September also we can add here. So till 9th September I have 10th and 11th we can add it here also. So fine. So here too also I have taken the Nifty's value, open, high, low, close, Nifty spot values. So here I have done specific workings in this big span. So little bit I'll just expand this span. So here I am taking for the June. So I'm just expanding this one slightly. I'm increasing this font size so that it will have more clear visibility. So I think all of you are able to see this screen. So here we are going to monthly and weekly calculations we will be doing. Monthly and weekly forecast we will be doing with respect to the VIX. So this is for the month of June, and June data I am taking to estimate the July trend. So here once I am going for the trends in VIX, what kind of trend you can able to find out in VIX? So VIX, using the VIX you can calculate the top, immediate top, monthly top you can say, and you can calculate the bottom and mid of the top and mid of the bottom also, and reversals. If any of this top is happening or bottom is happening, then the reversals. Once the bottom or top is being active or it happened on the chart or price has retraced from any of your top or from your bottom, then the reversal calculation is imminent. So here, what are the data I am taking here? I am first calculating the June month's minimum Nifty. What is the minimum value the Nifty has given? From minimum, I will be calculating the top. And same way, I am taking the maximum value of the Nifty in price terms. So, in the month of June 2020, Nifty had 10,553 as high. Nifty spot, again I am telling you, and Nifty had the low as 9,544. So these two values you got. Same way, I'll be taking the volatility index maximum and minimum value. So here I'm going for the month of June. So here June minimum volatility index and the June maximum volatility index. These two things I am getting. So once I get this thing, this is in the yearly format. This is in the yearly format. T, we have just taken the June month's Nifty spot high and June month's Nifty spot low. These two inputs we got. Second input we are taking June month VIX high and June month VIX low. So VIX high was 35.31, VIX low was 25.9. So this is in the yearly VIX. So this figure what you are getting, it is multiplied with 100, and this too also is the yearly VIX. 1 year's data is being used. It's the yearly format. It is there. So we want to convert it back to the monthly format. But when here one big confusion used to come, those who are using the volatility and those who are using the VIX. So volatility, we have to divide it by square root of 365 and multiply with the number of days, and we can get the monthly. But here VIX formula is having specific parameters. So straight away, it is very easy to convert it to the monthly format. So we are converting it to monthly format, and just by dividing the VIX with the square root of 30. Square root of 30. So this is in the monthly format you got. So if you want in the weekly format, so what you have to do, whatever the value you got in the monthly format, divided by square root of 7. So this is the easiest way to convert. So 7. So here the 1 week consisting of 7. So now if you tell that how I can get it in the daily format, every day how much it will be there, how I will get that. So if this part is there, 7 you have divided, so this should be square root of again 7 you have to make. So it is a 1 day is the factor of 7. So this is how you have to go. So this is very important for the VIX calculation. So what you got, yearly format, divided it by square root of 30, got the monthly VIX. If you want weekly VIX, you have to divide it by 7. And if you want the daily VIX, intraday VIX, what will be, then you have to divide the weekly VIX divided by square root of 7. So why this deviation is there? The reason is in the VIX formula itself that square root of 365 and all is being manipulated mathematically. So for that only. So this is the easy way we can find it out. So we got the monthly VIX and we got the weekly VIX, and this is how we can get the daily VIX. So we are going to find out the monthly top and monthly bottom. So for that already we have made a calculation here. We kept the June month low and June month high on table. So here we are taking the highest VIX, monthly highest VIX and monthly lowest VIX into the calculation, and that value is also we have called it here. So this I am just calling from that particular sheet. So what we have calculated. So once we did this, so I have just come across this. So monthly VIX we have taken from the how we have calculated the monthly VIX, and from the highest VIX and from the lowest VIX that I have made it. So now we have taken the June month low, June month high. This is the 4.73 is the monthly lowest VIX, 6.44 is the monthly highest VIX. So now we have to perform some operations to calculate the top and bottoms. So here, what I am doing here, just I am this one 451 I am getting. How I am getting? I am multiplying the lowest VIX, what it has given. The lowest VIX, whatever monthly VIX it is being given, I am multiplying with the low, and highest VIX I am multiplying with the high and dividing it by 100. So by this process I am deriving the price range. So this is the lowest. This says that from the June month data, when I have made it, this says minimum 451 point of oscillations I can get, and 600 and maximum 680 points of oscillations I will expect in the month of July. So this is what the price range reflects. Then we will go for the trend calculation, which can give us the monthly top, bottom, all those things. So this 451 and 680, it is giving me that this much of value oscillations I can get in the Nifty in the minimum and in the maximum side, and minimum and maximum side, and that too minimum and maximum side, that too in the over a period of 1 month and in the month of July. So this is what the so this part, once it is being calculated, now we'll go for the calculations of the Nifty top and bottom. So as I told in the beginning, so here we are doing specific calculations which is target oriented. It is not a mathematics which you did and market has not accepted it. So here small deviations will be there, 1 to 1.5 point deviations will be there, but market will accept these calculations. So fine. So these are the Fibonacci ratios we have for top and bottom calculations. Fibonacci retracement ratios are different. Top and bottom calculation ratios are different. So that we will see in the module 2. So on Fibonacci. So these are the ratio as of now. Just have a look on these ratios. So these ratios we are utilizing for calculating the tops and bottoms. So what I'm doing here, I'm just multiplying it with the value of 451, and I'm using this value 9544 low, monthly low of June, adding it to this price ranges, and these are my tops I'm getting. But while calculating for the bottoms, my calculations will be different. I'll be taking 10,553 minus the price range what I have derived for this thing, highest range 680, multiplied with the Fibonacci ratio. So each cell, if you calculate, you just see that I'm not using these price ranges. So for bottom calculations, I'm using a price range which is 680. For top calculations, I'm using a price range 451, which is already multiplied. Just for your clarity sake, I have. Once we calculate the tops and bottoms for the month of July, we'll take the mid of that also, because midpoint also works here. So mid of these two tops, mid of these two bottoms also we can take. So here we got some 3 and 6. 6 tops we calculated, 6 bottoms we have calculated. So here we are getting 5 midpoints. So these are the calculations we have done. We need to check it whether month of July these calculations has worked or not. That is more important. Simply we made it, that doesn't mean that yes, this is the top, it is going to come 11,400. This is the top, it is going to come. So once one top is given a crossover, that becomes a support. Same way, once one bottom is being broken, that becomes the immediate resistance. So this is what happened on the month of July. July high was 11,000. So this is the month of July outcomes, 11,341. July low was 10,299. So this, if you can just have a look here, our top we have calculated, mid top we have calculated. One of our calculation is happening at 10,361. July it has made a high of 11,341. So this was the only 20-point deviation was there. From here, the reversal happened, or the top became a resistance and prices started drifting. So once it is started drifting, so that in technical terms we have to say top reversal. So if the bottom would have happened, I would have said that bottom reversal. Now top reversal is happening. So top reversal to calculate, we will be using the Fibonacci retracement ratios, 0.236 and other things. And this 0.236 is having top calculation. We have used 451 price range. So I am using the same price range here, and my reference price range will be from 10,361, my calculated one. So here, because reversal happened from 11,341. Sorry, 11,341. So sorry. I have made a mistake here. There is a mistake. Initial estimation 10,361 I have taken. So it was wrong. So we have started from 11,341. So my top where I have got a reversal is 11,458, my calculated top. So the last one I have just got it. So from there my reversal is starting. Reversal is starting from there. So here what I have to do here, I'll be taking the 11,458. So there is a 130 point of difference. Though it is a 118 points of difference, near to 118 point difference. From here the reversal has started. So I am taking the 11,458 as my top and calculating the reversal zones here. So here what happens, once it is going for a fall, so till what point it should fall. So here it is saying that it is 100%, it is calculated 100% of your reversal is happening at 11,006. One point we have to make it here very clearly. These happenings of these prices, 11,341, 10,299. So these are the high and low of July when it has happened. So if you just go back to the data, so here one thing is, if you go back to the data, here 30th June we have expand, 1st July, this is the low, so which is carrying on, this is the first day of July, we have the monthly low, and 341, 11,341, most probably 11,341 high, this is come on the 29th of July. So this reversal what we are expecting, that yes, 11,341 was the high of this thing. This the monthly high has happened. This 458 has not come, and the reversal also did not happen on that. So it is a continuation of trend is happening. The first day, whatever the low was there, that is reflecting as a monthly low. The highest point of that month is also in the last few days of period. That highest point is sitting here. So here, this is the top and bottom we have calculated. Though we have accepted 11,458 as our top, and from here the reversal has happened, but this reversal price points has not come. Reason, the lowest part of the price is a past price. It has happened in the 1st July. So here July doesn't gives us much clarity on this thing. So let us move to the next month, which is August. So month of July, already you got it. This is the highest price and this is the lowest price of the July. Same way of calculation of the VIX. VIX, we are taking the lowest VIX and highest VIX price points, and all these calculations we are doing for the month of August. So this also I'll be little bit increasing the size of the font so that you can able to see this. So August also we have just recorded, this is the August month's highest price, August month's lowest price. So have a look in the August value. August first day also the lowest price is sitting 10,882, and this highest price of this August 794. This is coming on the last day of August. So 794, 10,882, 10,882 was the 882 was the lowest of the price point which has come in the first day of August, and this too also in the, you can say, last day of August you are getting. So here the same way of calculations it is telling us. So we have made a calculations from the low 10,299 what we got, 11,341 what we got. So tops and bottoms we have calculated. So if we just go back to this thing, 847 is one of the value we are getting, mid or the top mid we are getting. So here too also one close resemblance of 40 to 50 points is there, and 40 to 50 points are there. So this will be our immediate top. So here we are considering 11,847 top has happened. So one part is giving us one view here. We are using a static previous month's data. And from that static previous month's data, we are expecting a top and bottom. more or less it is coming. However, those tops and bottoms having a big, huge time gap, in the sense the lowest price point is maybe happening in the beginning part of the day, highest price point is the happening in the last part of the month. This kind of one deviations is coming here. So how to improvise it? So here in the module I have given it here. To calculate the tops and bottoms, just go back. I'll go back to the fine. So here is, I have given one point. So to focus that point only, I have just made this slide. So monthly top can be calculated using the trailing month lowest wicks and trailing months price low, trailing 1 month, and monthly bottom can be calculated from trailing 1 month's that highest wicks and trailing 1 month's lowest wicks. So this part I am going to change here. Little bit of same calculations I am going to do here. However, I will be changing little bit. So what are the changes I am going to bring it here? Same thing you can incorporate in this Excel sheet once you get it. So here, the last part I am sitting here. So like we have done it for the month of June, July, you have seen it. But on 9th September, I am going to change this value from the 10th August to 9th September. So here, I'll just reduce these things. So 10th August to open, high, low, close. So all that I am taking, if I am at 11th, so minimum value. So here too, also 10th August to 9th September, same calculations will be there. However, small changes will happen here. So here, highest value, so 10th of August, calendar month you have to take. 10th of August to, sorry, something is, or my mobiles are interfering. Fine. So here, just give me changing these things to derive the top. So top will be a changing parameter here, 75. Even though new data points are coming, you do not have to worry, because as long as that high and low has not changed, as long as the VIX is not changed, so you won't get a new value here. So 153 to 174. So here I have maintained two different Excel sheets. One is for VIX, another is for the Nifty. I'm going to calculate these things, and now price points, everything has been calculated. So this is the monthly price point, price range. So now I have to calculate the tops from the F168. So here the price point, and I'll be going on calculating these things, and bottoms will be, I think bottom calculations are perfectly in line and meet. So this is what we have calculated now. So till 12,390 is our different tops are coming, and these are the different bottoms also is being validated. So now we have to just, so this is the trailing 1 month we have taken. So these are the tops. So earlier what we have seen, whatever the tops and bottoms we are calculating, it is having either a deviation or the retracements of the top has happened much earlier to forming the top, so which is impractical. So retracement of top has happened much earlier time. So this is one of the problem we have seen. So once we change the data set, instead of taking a static data set of the previous month to the current month, so we are getting these values. So now I will be September only couple of days are here. So we'll be taking the highest price point. So these are the price points in the highest parameters it has happened. So this price points reflects September Nifty spot highs. So you got a 553, high 554, 584. So just you are going for this values. 584 near to 600 you have come here. 584. 452, 554, 553, 584. So these are the values you are getting. So mostly here the mid of this thing you are traveling. Mid of this thing is traveling. So mid of 495 to 600. These tops only you are traveling with a 30 to 40 points, sometimes 10 point difference. So this is the value you have traveled. So now if I can just go back to the nearest highs, 452 also it has come. So this also one of the mid value you have got it. So if you go back to this 381, so it is just 22, as I told you, 1 to 1.5% difference will be there. So here you just got for a 431, so 437. So you have traveled for out of this 9 days, 1, 2, 3, 4, 4 days, for almost 5 days, you are traveling in this zone, 554, these highs. So this is your immediate monthly tops it is suggesting you. Monthly tops it is suggesting you. And when, if I take any of these things into account, if I take 554 into account or 584 into account, so here 547, so this is almost validating that 547. So if I just take the top reversals, so top reversals, how you will calculate? So anything which has already happened or validated, 553, 554, 584, 452. So we are taking 547 here. So I'll be taking the 547, which is 172 of J column. So here J column 172 of the J column. So now same price range and other things will be there. So here, and this also has to be calculated from the, this two also is wrong. So here it should be J 168. So here we got these values and reversals also have happened. This is the top reversals. So top reversals has come to this level. So you have seen that only one day you have just come down to a level of 185. So much below 11,245 and gone up. So these are the things you got. Now question is how I'm going to use it. All these calculations I did, it is perfectly right. It sounds good. Okay. It is trailing 1 month data we changed and immediate tops we can able to find out. Mid of top we can find out. If top reversal happens, we also find out how we are going to use it. What way it is going to solve my requirement. Say I am saying that okay, market top is for faster day it has given me 553. So okay, this is near to this. Second day 554. Second day also same top has validated. Third day also 584. So this 1 or 2 days of confirmations of this market top, if you are getting closing basis also 535 it is giving, 527 is giving, very closely it is telling that okay, immediate for 2 to 3 days I am getting that yes, my market top is 11,548. So what I infer, how I translate, how I understand, how I will be giving one conclusion to this thing. That means as a trader, after a 2 or 3 days of observations of these calculations, I will be coming to one conclusion, yes, this is the top. From immediate actions of up move is now arrested. Now the up move from here, 1 or 2 days is enough. 1 or 2 days of this confirmation says me immediate up move of this Nifty is currently being arrested here. It may not move now beyond this point, and from here some amount of correction will be there. So at this point of time, I should be a seller in the Nifty, along with that some hedgings if you want, seller in the Nifty, along with some hedging of buying of a call option or anything you can. So same way, if you find out a bottom, so here you can say 547 is the immediate top, it may not move. So what I did, say second or third, whatever the September 3rd, I am selling Nifty at 11,500 level, and 11,500 level I am selling the Nifty. I am buying a call option of 11,500 to hedge it. So this call option, what I am hedging it here also, that too also I will have one specific restrictions here. So the restrictions will be, I may put my next stop 11,657 above. If it goes, I will close or reverse my trade. Stop loss if you want, instead of having in spite of having a hedge, and I'll be waiting for a lower trajectory. So what will be the lower trajectory? Lower trajectory is one of these values. So these are my top reversal. So once the top reversal comes, so this is the major support zone. So 0.618 to 0.786. So my conclusion is 11,548 Nifty sell with a stop loss of 11,657 with an aim to gain from the reversals till 11,361 to 310. If this level penetrates, I can expect 240 level also, 11,240. This is spot level. So future some premiums or discounts will be there. So you can ignore that premiums or discounts, and you can just go with that. So this is one thing. Same way, if I am getting a bottom, same way if I am observing that one bottom is being formed in the lowest price points, so I will be a buyer of the Nifty along with a put option, and then I will be finding out the bottom reversals. So bottom reversals will be in the upward directions. So where it is taking me. So for that reason only, this top and bottom is being utilized. So Sagarji is asking a very fantastic question. He's telling that when the highest price has happened, then VIX will be lowest. And when the lowest price has happened, the VIX will be highest. Then why we are taking reversely for calculating this top and bottom? So whenever I used to tell that, if you Sagarji, if you observe, the falls in market will be having more elasticity than the rise, or falls will be rapid, falls will be quick, falls will be vigorous as compared to the rise. So for that reason here, highest price point we are utilizing for calculating the bottoms, and lowest price point we are utilizing for calculating the tops. So for that reason only, for the highest price point, I have taken the highest VIX or highest price range for calculating the bottoms, and from the lowest price point, utilizing the lowest VIX for calculating the top. So this is why, for that reason only I have. He's asking about where to get the VIX. So India VIX historic data. So here I'm just going for this thing, India VIX. So VIX you are getting here. So here I'm going for the NSE site. So this is the old site, new site, they may give you some other link. Historical index VIX data. Choose the dates, 1st August 2. So we have taken for September, couple of days. So we can take, I have taken from 9th I have. So I just want to take for till 12th. So 10th and 11th if I want. So these two data points I require. So these two data points I required. So these two data points, you can say, I am also copying this, I am updating in your this thing. So I am just keeping it separate so that only a part of data I require. So this is 10th and 11th, open, high, low. So this is the two values we required. So here I think wrongly I have pasted. So I'll take it to the VIX side. So I don't want that. So date and all I will put it. So here open, high, low, close, and this is a previous close, so which I don't want. So this two days data I have put it here, and if I want the date, so 10 and 11 September. So 10 SEP 2020 Just for reference, and 11 SCP 2020. So this is what we did, and Nifty values also, if you want, you can get historic index values. You click here, you go for 9th September. So these two data we do not have. Anybody has any other queries can put it. So here 12th September is holiday, so we are taking these things. So these two values also I am taking to the Nifty side. Separate Excel sheets I have maintained here. So Nifty sides also I have taken here. So here these values I required. So open high. These two also I am taking it here. Fine. So now if you want to do these calculations, slight changes will be there. Anybody has any other queries? That you can't able to tell how many days it will take for the trend reversal with respect to the... See, one thing you have to, Ramkumar, you have to understand here. You are doing specific mathematical calculations. So always I used to say the same thing here. After learning less specific concepts, we used to think that we can predict everything. We can become Brahma and predict everything. It is not possible. Calculations have specific limitations. So whatever you got, whatever the scope that calculation is having, you restrict yourself to that. If you think that I can able to predict everything, then it is not possible in the market. Capital market will punish you for that. So that for that is a part you need to very carefully understand. We made some calculations. Gantt trend reversal date yesterday was there. Gap down opening happened, closing basis it did not obey. So here calculations we can do. We cannot time the calculations. We cannot time the calculations. If you can able to time your calculations so precisely, then you will be next to God. So which is impossible. So which think you are a human. You are doing a human calculation. These mathematics are human creations. So for that reason only, always we must have specific things. That always I used to tell. If you have a car, if you put like a tractor having one wagon behind to carry the goods, in your car it is having the same capacity engine. If you put one wagon and try to carry like tractor, is it possible? No. Why? That design, that model, that calculations are different, that engine configuration different, that wheel configuration different. So everything is different. Same way for the capital market. Capital market, to be successful in capital market trade, first is you should have an authentic calculations which will more or less market will map to it. I am using more or less. I am not telling exactly market will map to it. More or less. There will be a standard error in your calculation. There will be a deviation. 1 to 1.5% deviations will be there. First, you have an authentic calculations. In any process, it must be more or less market will oblige it. Second, the money management. You have to protect your own capital first. If you are invested in the market, you must learn to protect your capital. Once you money management second. Third, you should have a genuine expectation. Not too much of expectation from the market is very, very dangerous for you. If you expect 50%, 60% per month, even some people expect per day 10%. So this kind of expectation also goes well with many fellows, they used to say. Genuine expectation. So that part also is very, very important. So here, so one more question is coming. In expansion ratios, which ratio is strong resistance, how to calculate? Sanjay ji has asked a good question. In expansion ratios, Fibonacci chapter I will be taking that. These two ratios are very, very strong ratios. 1.618 to 2. Sanjay ji. So this part I have told you how to utilize this VIX for our option strategy trades. Though you have a separate module on the options, but option strategy, what we used to do? We used to do some risk management. Whether sometimes we used to be market neutral, sometimes if we are having a positive expectation from market, we do restricted way want to initiate the positive trades or negative trades. So this is most likely to have a risk managed trade. How VIX is going to guide us for option strategy formations? I'm just going to give you some specific simple rules. So VIX, you can see that every time there is a volatility index is having a changes here. January 2022, September till date, we have put it here. So every day you can see that there is a variations is there. Open, high, low, close is there. Month of January, it was in the 11,000 range, and now slowly it is 11 to, so 11 to below 20 range it was there till the month of February end. So post February it has gone to 23. There is a deep correction. It has gone to a very high level of 83 level, then corrected. So these movements of VIX also changes here. So can you say that VIX will go above 100 or below 0? We are seeing these values. Can anyone will tell me, is it possible for the VIX to go plus 100 or negative? So this scale says that plus 100 not possible, minus 0 or minus negative VIX is not possible. But recent past, many of you would have heard few months back during the deep correction phase, crude price has gone to negative. How many of you have heard this? International crude price, crude future, especially gone to negative. How many of you have heard about that? And it was not a small negative, minus $19. Minus $19 it has gone. Though you are getting it is the now it is that minus $19 it has gone. So when that, yes, it has gone that recent past. This, yes, it was on the expiry date. Once that negative pricings are being figured, when any financial instrument goes negative, that time what happens? Your VIX or the volatility index calculated using that will go above 100. So your formulas of VIX will crash. Your entire risk management system will crash. Entire risk management system. That means it says that if you have deposited 100 rupees in your bank, and if the money goes negative, bank is telling to close your account, you pay me 20 rupees. You pay me 20 rupees, then only I will, or bank will demand you give me 20 rupees. Your 100 is gone. That is this thing. But 20 rupees you need to pay for that. So sounds illogical, but it has happened in the recent past. What has given a big warning signal. Why I am telling this? This has tweaked our risk management system and our entire stock market's calculations was phenomenally. It has given a big questions to all people involved in this particular technical domain to think multiple times. If that happens, then your volatility also has a negative scale. And if that happens, your volatility also have a positive scale beyond 100. So that also has happened. Think about crude options in the international market. That time the crude options IVs on that day, when it has gone to negative, IVs would have been shoot up to say 170 or 180. Then only that negative value is This is the money, they have got it. Anybody has a put option, he has got the value more than the intrinsic. Whatever the intrinsic value is there, more than $20 more than that, he has got it. Intrinsic value is 10, but he got 30. So that has happened. So this is also, you have to be very, very alert. So post these things, our exchange, MCX, our exchange, NSE, our SEBI, everybody has made a things, financial instruments, the minimum value should be 0. It is not being set at 0. Now it is being restricted. Post that event, they made it financial instrument can come to 0, cannot go to negative. That has a development happened, and most of the systems have been tweaked for that. Fine. So we'll be moving to the option strategies, what we can initiate and gain using the VIX. So this VIX I have segmented into 3 parts. One is less than 20%, greater than 20 to 40, greater than 40. So how you understand this thing? So whenever we are having a 20% below VIX, we are stable. We are stable, we are moving up, or we are not having great oscillations behind that. So in this 20% less VIX, whenever we are there, we must form the strategy with a theta positive strategy to gain from the time decay. Many strategies you can form. There is no restrictions. N number of theta positive strategies you can form. I will be suggesting one best strategy, credit box spread in put or half box spread, you can say, with near month OTM call sell at box upper strike or the mid strike, anything you can choose. So this is a combination, is a hybrid strategy. I'll show it in the Excel how it has performed along with the VIX, along with the Nifty. When it is 20 to 40% range, this particular time suggests to form market neutral delta zero strategy. Market neutral. So this is not market neutral. This says that you are anticipating your up move to continue. You need to form a theta positive strategy. Time decay is going to be prominent here. Time to gain from time decay, you are forming this strategy. So this is one part. Second, 20 to 40, you are not sure which side the market is going to move. So you are forming a market neutral delta zero strategy. The most preferable strategy will be 2:1 ratio call and put spread. Do remember 20 above, 40 below. And it is not the only one time. Many times this particular strategy also can be initiated before the result month, before the quarterly result is being announced. So that time also you can form. So wider price fluctuation gives the profit here. So here once it goes to above 40, here too you have to form wide wing butterfly market neutral strategy both in call and put. So you are neutral in both occasions. One occasion you are having some expectations to gain from the off move. So I am just going to one by one each strategy. So the first strategy, 20% below. So here I have just taken one example. You can form many examples. Theta positive and this thing. 12th August, VIX was below 20%. So earlier trend should be above 20. It is coming below 20. So we'll go to the VIX page. So this is the July we have maintained, and 20th August we are finding out. So 19th August we have formed, 18th August we have 20.43, 19.96. So we are coming to this level. So 1 or 2 days of stabilizations is required. So here 1 or 2 days it must stabilize. So here too also lowest form 16.85, 19.46, so 16.34. All these days are, so 12th August is a day when we have seen the lowest basis 16.85, 20.85. So this has happened. So I am going for what I have suggested here, box spread, half box spread. Full box spread involves call and put both. Credit box spread. I have used the term credit box spread. I have used the term half box spread. So only one part of box spread will take. Along with that, one call option will sell. So I am buying a 11,300 put and selling a 12,300 put, 1,000 point difference. So mid of this thing comes to 11,800. I am selling a 11,800 call of September. So this is the August month. I am going for the September month. So we have to. So half box spread we have. You must ask me. 11,300 strike from where I got. Why 11,300? Why not 11,500, 600, 700? On 12th of August, we are at 11,308. VIX has fallen to 16.85, closing at 20.84. 11,308. This is the price. Closing hour itself, I am initiating this strategy. The closing price I have taken for estimation. I am buying here. I'm selling 981. I'm getting credit. Midpoint of this 108.35. I sold this. There are second reason for this strategy also. This is a strategy can be carry forward. Do you remember? Carry forward. If this strategy goes against you, no need to worry. Carry it to the next month. You can carry for 2 months, 3 months, 5 months, whatever may be. The box spread is a strategy which can be carried forward through rollover process. Not that August month will remain for me till September, October. So same strategy, same strikes, you can take it to the September, October, November. So that facility rollover is there. So we are selling a call, we are selling a put 12,300 deep in the money, 11,300 put we are buying one. We received a credit here. We sold this also credit we have received. And this time the VIX was 20.85 stabilized. Nifty was this. We are expecting to gain from the off move of the Nifty. Very next day, see the VIX movement. Once the price is falling, VIX is increasing, we are going into specific losses. Once the price is moving up and down, just 200 to 300 point, 11,300 level you have entered, it has gone to 466, hardly 166 point. It has gone to 250 point. It has gone to 260 point. See, this is your profitability graph. So when it has slided 1.5, it has gone to 150 point, 200 point. Your liability is not increasing. It is 1,800, 1,300. So like this way is there. Very less liability is there. But if it could have moved beyond and beyond, your profit also would have gone beyond that. So this strategy, try to understand this part. So one thing I just want to change here. Say I have taken 11,800 call, but I am getting the difference. So one thing, just I will change and see. I will show you here. So by this process, how much credit I have received? 1,000 point is the gap between two strikes. I got a credit of 818. So I have a loss risk of 818 if I take it. 181 point. I am selling 108. I am not satisfied with that. I am telling that 181 point I am going to lose. Even September becomes 0, still I have 81 point to lose. So 81 point to or 80 point to lose, which I do not want. So if I change this thing with the 11,500 call, so here you remember highest profit 5,900 you got. If I change this with a high 11,500 call, what happens here? My liability is also falling down and my profit also fallen down. 2,000 maximum I got. So 2,000 maximum I got. And do remember, if you sell 11,300 call, you will be at deep loss. 11,500, 200 point gap you have given, your profit become half. So the liability part also has reduced a bit. But if you sell 11,300 call, then your no profit will come in this, rather you will land in loss. So this is a theta positive strategy. So here too having some theta which will be much lesser. So here you have a theta. So by this process, higher theta, lower theta. So you will be having, so buying here, so negative theta, here you are getting positive theta and theta positive. And if you can, little bit of advancedness, if you just have, if you can understand and if you can able to impose something here, if you keep a theta greater than 5 and less than 10, by through any simulation process, any strike choice you are doing, by changing the strikes or anything, if you make the theta plus 5 and less than 10, plus 5 to 10, that range, your profit will be optimized in the theta terms, if you understand. So this is the fast strategy best from the week. This strategy you have initiated, and after you initiate the strategy, Nifty fall down to 11,000. Dilip ji, 11,000. So you will be a profit here, and this 181 rupees will be a loss part here. So same strike you roll over to the September month, and that time you can sell one October 11,800 call if you want, or whatever the spread you have initiated at 18,818 spread, and here too you will be gaining something. 180 rupees you have gained. So 180 rupees, if you get some 60 rupees, 70 rupees you get gain. So your total spread cost is coming to, so if Nifty fall to 11,000, so here your 181 rupees risk is being triggered, 181 rupees loss is being triggered. But this is not a complete loss. Out of 180, 108 you sold, you would have got 50, 60 rupees back. So you have a 868 or 70 rupees as a spread. So any strike on the month of September which is giving you 870 spread, you initiate that. Carry that trade next month. So you are not losing anything. Just carry it. September, October, only brokerage is your losses. First one you have seen. Second one will go. Second one will be little more easier and little more clear also. So here's our second strategy based on which it says that 20 above, 40 below. So we are going to form market neutral delta. So 20 above it has gone. So previously what was there? Currently it has gone to plus 20. So previous was, it was below 20. Definitely it should be below 20. From below 20, if it migrates to plus 20, then only initiate. From below 20, if migrate. Earlier what was there? It was above 20. It migrated to below 20. So this is very, very important. So from where it is migrating, that is very, very, very important. If month-long period it maintains in this thing, you can't able to help it out. You have to just see that, okay, it is stable in this range, I will go with that. So here, one migration happened. 28th of May, there has a March fall happened, everything has happened. VIX is at 30. So above 20, below 40. So you can say that comfortable zone is at 30, mid of that. 20 plus 40 divided by 2, mid. So neither less than 20 nor greater than 40. We are at 30. So this is the time you should form this strategy. Nifty is at 9,500. Option strategy we are going to form 2/1 ratio call spread and put spread. Ratio call spread and put spread. Many of you would have observed during the result time, I used to very frequently give this strategy in the YouTubes, in the our paid groups and other things, and it has phenomenally given us the profit. Excellent profit it has given. So this is a zone we have to enter. So 30. So how 28th May. So we should go back to that VIX page and see. So previously we have gone to a level of 40, 60, and then we fallen down. So here 28th May we are coming to 30 level. So 40 to 30. 20 above, 40 below. So we are just, this is the time to initiate this strategy. So if I just go to this strategy formation page, so which is here, I can say 9,500 because 28th May is over. So May month is over. So I have to go with the June series. So I am going with the call options of 9,500. I am selling one lot. Put option of also I am selling one lot. Buying two lots of these things, 9,600 and 9,400. Only 100 difference I am buying. So this strategy if I form, so this is the VIX here, this is the Nifty level here. 28th May it is being formed for the June. So why it is this strategy having a bigger risk is the consolidation. Consolidations is the biggest risk in this strategy. If price does consolidate, you will be in a deep trouble. It will give a huge loss. But this is a VIX zone. 30% VIX is a zone where consolidation not possible. Either price has to react upward or has to drift downward. Consolidation is completely ruled out in this. When consolidation is the part of this thing, or once it maintains below 20%, that time the consolidation will be the trend of the day. Consolidation is already there and it will remain there. But this is a zone, simply few points above 20 will not be there. Up in the 30% zone, so that zone of 20 to 40, greater 20, less 40, consolidation is a part, very remote possibility of a consolidation. So these things also happened. So there is a big movement is expected, either direction 300, 500 points. So these expectations we have given. We entered 580, 800, 10,000 level. It has given 16,000 profit. Slowly it has gone up and again slided below also. And in between, you can say maximum loss, it has given 3,600 in this entire month of, I have taken entire month of holding. Maximum profit it has given 32,122. So that too also it maintained in that 30 zone. You see the VIX is maintaining in that 30 zone. In the zone of 30, it is maintained. So slightly just 5%, 10% difference, it is oscillating. This is 2/1 ratio call spread and put spread. Any direction it will go, you are not known at this point of time because it is the highest VIX. 30 also is a very big VIX, and this time it is your market neutral. You are not linked to whether the market is going to be go up or fall. So you are not linked. It is purely based on VIX we are deciding, Sagarji. We are not touching the IV part at all. When the option module will come, that time we will discuss about the IVs. Because you have to make the things simple. So when I should book a profit, earlier strategy. So here too also, when I should book a profit, here, earlier strategy gives you maximum profit. Very carefully listen. This particular strategy will give you the maximum profit when the Nifty will come to 11,800 level. Post 100, because 100 rupees you have sold here. So you can say your profits will be max here and it will slightly expand, or it will be slightly in the same zone till 108 you have this sold here till 11,900. But post 11,900 your profits will start reducing. So try to book the profit here 11,900. So now coming to the second part. Here you have two definitions. One is with respect to your raw definition, another is with respect to your mathematical definition. If you go with a raw observation based definition, so here 30% VIX is there, any 400 to 500 point oscillations, you can set 10,000 level. This is the level you should come out, or 9,000 level also you come out. This is the raw definition. If you go by the definitions of our VIX, based on VIX, how much percentage of how much price range you are expecting divided by square root of 30. So the day you initiated, what was the VIX there, monthly VIX on that day? That monthly VIX multiply with your price into this divided by 100. So this is your monthly price range of 520. Just take the 2/3 of that. Complete. This is 100% retracement. So this multiply with 2 divided by 3. So this is your 346. So you can say you start booking your profit, safe profit 9,836 above, or you can say that 826 level here too also you have been negative, but one mispricing is there. So because of that. So that small losses, that losses you are getting because of that mispricing, or 9,143 above 836 or 9,143, or you can just, because this is the expectations and this volatility will not allow the consolidations to happen. So here 10,010 you can take complete. If you have multiple lots, you start booking profit 8,336 to 10,110. If you have multiple lots in the downside direction, so you too start booking the profit from here. Fine. So 890, so 901.43 to 8970. This is the level you can start booking the profit. So this is a mathematical way, or else 300 to 400 points of oscillation in either direction you can start booking, because you are market neutral. And this particular strategy can be taken in two different occasions other than this. One is 30, other result month, when there is companies are going to give their quarterly result. So that time you can initiate this strategy. You can take this kind of strategy when the VIX is fallen, it is very rare, fallen below 10, or IVs are IVs of the majority of the options, IVs of the majority of the options below 10. Also you can initiate this strategy. There's some amount of oscillations will be there. That says that we are into a deep contraction zone, deep consolidation time. So consolidation will break. Sometimes it will break. So this is also a third conditions you can generate. So, but good result it gives in this 30% zone. 30% zone. Good results it gives. So strategy. So which will be our 40%. It's a very rarest case it comes, but it is a possible thing. So it is a possibility. Everything is a possibility in the stock market. In stock market, do not expect one possibility won't come. Be prepared for all possibilities. So this particular strategy says when there is a VIX above 40, or any time you are identifying any stock option having a IV greater than 40, you can implement this strategy. This is known as the wide wing butterfly strategy in market neutral approach. 12th March. So here thing is that again same observation, when the VIX has moved above 40. So this is happened in the 12th March. If you so go back to the VIX page, so very deep correction happened, and the market has, the VIX has entered to 41 level, and closing basis also it maintained 51. So this price point of 9,600, from here you can expect a huge bounce back to happen, or a further deep correction can happen. Though next day there was a 300-400 point off move, but very next day it has surrendered all gains. So here in these situations, the wide wing butterfly is very, very important. So what is that? So you are going to form, so 40%, 9,600 call and put, one lot I am selling. I have seen a VIX of 40, above 40. So this is the proper time to form this wide wing butterfly. So you will be forming a wide wing butterfly strategy here. So here 9,600 level Nifty is there. You are selling a call option and put option, buying 9,500, 100 point below put option 2 lots, 100 point above call option 2 lots. And here I am taking a gap of 500 to 600 points, from where you have to get it. Whenever you are forming a VIX, here this is the trickiest point of this strategy. So the spread 9,600 to 500, 100 point spread is there. So for forming the wide wing butterfly, so spread should be 1 to 3 or 1 to 5. So 1 is to 3. So here 100 point means should be minimum 300, maximum 500. So the strike what you will be selling next, OTM strike, that should be minimum 300 point difference, maximum 500. Beyond that, if you get, it will be more unstable, it will become. Suppose if instead of Nifty, some stock options you have entered, suppose you are call options you are selling and another call option you are buying, there is a 5 rupees difference. So the next call option should be sold 15 rupees or 25 rupees. So the difference from 9,700 to 10,200 is 500 points. 9,500 to 9,000 is 500 points. So why doing butterfly? One wing is 100 point, another wing is 500 points. So that is why wide wing butterfly strategy is become. This is being done only to control that time decay or to accept that time decay. So or to manage that time decay, theta decay in the strategy. So we have made it. Yeah, I have taken some warm water. I have taken. So this is to make that strategy little comfortable for our need. So we are just going for that particular strategy. So I am just explaining that strategy how it has performed. So we have 12th March to 26th March. I am taking for entire month how it has performed. So call options, I have told you, this is the call option. We sold one lot. Here bought 2 lots, sold 1 lot. So this also is being sold, sell 1 lot, buy 2 lots. So this is call side, this is put side. So each time call profits, put profits and loss. So separately I maintain that call profits and put profits. So if I can just add on these things, it is giving me one day 480 rupees loss it has given, maximum it has gone to 11,000 rupees, and minimum profit also has come down to 993 rupees. So what time? Every minutest time it can reflect. Now if you have initiated one strategy with the expectation of 20 or less than 20 weeks, you cannot say that the 20 weeks will maintain forever. Maybe in the afternoon itself it can go to 40. Maybe afternoon itself it can go to 60. Anything can happen. So if you are a strategy trader, just look into this VIX part very carefully. Many other strategies you can able to simulate. So in option strategy section also I'll be taking specific strategy. So here I have just conveyed you 3 different strategies on 3 different scenarios. If you just look into the internal of these strategies, one place we make it as a theta positive, one place we made it as a theta negative strategy, one place in the third place we are keeping theta as 0. This third strategy we are making almost theta as 0. Second strategy we have made the theta as negative. We want to gain from the intrinsics. First strategy we made it as a theta as a positive in theta terms. If you go into the delta terms, the first strategy what we have made, so called delta, if you sell it, it is a negative. So we have a deep in the money which will be having near 1 delta. So here too also we have maintained as a negative delta. The first strategy 1 should have almost 0 delta. Second strategy also we have almost 0 delta. Third strategy, these 3 also having a 0 delta. So in all 3 strategies, we have purely played in terms of theta, time decay. So which is a definite component. So in all 3, we have just played based on or we have just initiated the strategy based on theta components, time decay component. Looking at VIX, we have just pinpointed which kind of time value is going to beneficial for us. First case, we have taken positive theta, lowest VIX. We just want to gain from time decay. Second case, we are seeing that we are entering to a zone where the volatility can give a greater intrinsic oscillations either in positive and negative, we kept the theta as negative, gain from the theta. Third case, we are in a position where the rapid price movement can happen in either direction. It is not known. We are in a stage where one tsunami has come or some big event is going to propel the or move the price in any kind of direction. So in that case, we have just gone for this wide swing butterfly strategy. So this is all three cases we have just taken based on theta.